Great answer.
Well,
Great
okay.
answer. I'm totally impressed. With that said, tell us about how you got into business, how long you've been in it, and how you became a commercial lender. Because I think it's a complicated process to make sure that you loan to people where everything is successful and you get paid as agreed.
Yeah. There's an old saying in banking: it's the return of principal, not the return on principal, that really matters. But the most important part about what we do is we're relationship bankers. We're not transactional, so we're looking at kind of the holistic relationship for our potential clients.
Hi, everybody. Welcome back to Strike Zone Studios in Upper Higher Wolcott. We're back. It's summertime. We've missed a couple of weeks, so we apologize. But, boy, we have an action-packed guest today and show on financing. You know, previously we were doing private money with John Frasco. A ton of hits on that. So we know you like it, so we thought we'd bring you back more from a high-level executive that works for Ives Bank. Chad Stewart, thanks for coming up.
Yeah, thanks for that warm introduction, Tom. High-level executive. I hope I can live up to that.
Yeah, I hope you were able to get up this hill. Were you? Oh, my.
Is that what you refer to by high level? Is you made it all the way up the hill?
We're up on the high mountains of Wolcott. So, Chad Stewart, commercial banker, tell the audience in plain language what you do.
Well, in plain language, we are, we're a relationship bank at Ives Bank. So we do financing of, all sorts of different endeavors. We'll do business finance, we'll do real estate investment, we'll do owner-occupied real estate. But the most important part about what we do is we're relationship bankers. We're not transactional. So we're looking at kind of the holistic relationship for our potential clients.
Okay, so does that mean you want more than just a loan? You want banking? You want future business? Is that kind of what that means?
Yeah, hopefully what the client wants to do all that stuff with us because they're getting great advice or great service. But exactly, we're not looking just to put dollars out the door. We're looking for deposit relationship. We're looking to talk about retirement planning. We're looking to talk about buying your house, your residence. We have a great, residential mortgage department as well. So for a bank of our size, which is, just over $1.5 billion in assets, we really are a full-service financial services provider.
Now, this company was called Savings Bank of Danbury, and I understand they're at least 175 years old. What was the changeover to become Ives Bank, or the reasoning?
I think the reasoning was severalfold. One, in particular was branding. The Savings Bank of Danbury, not only is it fairly long in terms of URLs and your email, but it's also tied geographically to one region. I work out of the Norwalk office. Me and my team, we cover the southern Connecticut, kind of coastal Stamford to Norwalk, up to Bridgeport, New Haven. And if you ask somebody in Norwalk what county Danbury was in, 9 out of 10 people wouldn't know it was part of Fairfield County. And so by kind of rebranding the bank as Ives Bank, it's a portable name. It's one that you can take to any corner of Connecticut as well as Westchester or Putnam County, New York.
Yeah, we saw a lot of banks shorten their names in the greater Waterbury because we've been at banking headquarters for years over here. And Savings Bank of Danbury, now Ives, took a position with three or four branches and a lending team over here in Waterbury 20 years ago. And they're pretty high on it. And we were saying, oh, in Waterbury, we think Danbury's high level. But when we heard the story for that your president, Martin Morgado, talked about at one of the annual meetings, we were easier able to understand it. Now, a minute ago, you said you and your team work out of Norwalk. What does that mean? Who consists of your team and how many, and how does that work for people that don't know about banking?
Sure. So, high level, Ives Bank, formerly Savings Bank of Danbury, has a total of 16 branches. 12 of those are in the greater Danbury region, so Danbury, Brookfield, New Fairfield. 2 of them are here in Waterbury. And then there's 2 down in southern Connecticut, one in Norwalk and one in Stamford. And those are the 2 newest branches of the bank. So we're kind of the unexplored territory down there, setting our flag, now the Ives flag, down into a couple of new new territories.
So how many lenders and what is the makeup of your team? Because we hear this all over the place. Team. You got to be on a team.
Well, I like to think that just about everybody that works down there is part of my team.
Yep.
And, we do work closely with our branch representatives as well as the residential mortgage brokers that work down there. But direct reports, I have two experienced lenders, one in Norwalk and one in Stamford. I'm a player coach, so I also do loans of my own. And, we reach, like I said, from pretty much from the, Westchester County all the way up to New Haven would take you to 95% of our loans. We've got, some stuff in Hartford and stuff in other places, but we primarily focus on our knitting and try to, service those clients which are in our service area where we can get to them and then they can get to us.
Okay, so that would be lending apartment buildings, development land, industrial buildings, retail shopping centers. You go across all those lines, offering financing and banking services for those kind of customers.
Yeah, on the commercial side, commercial real estate, or CRE as we call it, is really, kind of broken down into two types. There's owner-occupied real estate, which just what it sounds like, right? Your trucking company or your pizza company or whatever owns the building that they're operating out of. So that's owner-occupied real estate. And then you have investor CRE, and investor CRE, as you kind of touched on, comes in all sorts of flavors. It comes in,
True.
Mixed use. It can be industrial. It could be multifamily residential. So, right now, office is pretty challenged, as you might know from your real estate practice. So, but we take a look at everything. We got a little bit of everything in our portfolio, but the trick is not a lot of any one thing.
Yeah, and I think that you have to look at all these, like the office markets. You got to look at them all case by case. We all had this assumption that the office market is dead, but it's not, and there's plenty of people still working. And medical is considered office, and I had the pleasure of going to a regional SIOR conference, Society of Industrial and Office Realtors, over in Jersey City, across from New York City. Very impressive, and they had a panel with 4 people, and I was almost going to skip it, and I was so glad I didn't, because there's plenty of office buildings that are full. The medical makes a whole nother side of the office portfolio and how you run it and how much parking it has to do and who's going to turn the lights off at night, et cetera. So that was cool. And also, I have a fellow that would buy an office building right now, and I can't find anything that's performing correctly and something he'd like to buy. So taking a closer look at all these segments is very important to make a wise decision. And because you're looking at buildings the same way I am. Are they performing? Is it safe to make a loan? Is this a sale that I could sell to somebody and they love me? How did you get into this commercial real estate business? How long have you been in it? And tell us your story up the ladder.
Sure. One thing I just want to touch on and kind of expand on.
Oh, wait a minute. There's no subject changes here.
Is that right?
Continue.
That you had said with regards to even office properties. We're seeing that office properties with smaller users still remain strong, right? The 1,500 to 3,500 user of office space, still a high demand. You also see in markets, especially down in Lower Fairfield County, where office buildings are being repurposed to residential, especially, but also hotel use. So the more buildings that you take off of the rolls as far as office building, that creates more demand, obviously, for office users too. So it's a virtuous cycle, if you will. The more users that you can find for the office buildings, whether it's a traditional office user or if it is repurposing it into residential or hotel or something else.
Great answer.
Well,
Great answer. I'm totally impressed. With that said, tell us about how you got in the business, how long you've been in it, and how you became a commercial lender, because I think it's a complicated process to make sure that you loan to people where everything is successful and you get paid as agreed.
Yeah. There's an old saying in banking, it's the return of principal, not the return on principal, that really matters. So, Yeah, I actually started in the banking world before I left college. I went to the University of Connecticut, and the University of Connecticut at the time when I went there back in the dark ages before the six national championships for the men's, we had a Yukon Federal Credit Union. It was a student-run credit union, and I served as an officer at the credit union. And by serving as an officer and doing certain tasks, you got certain points towards an internship. So after my junior year at Yukon, I won, and I put that in air quotes, a internship with Connecticut Bank and Trust, the late great Connecticut Bank and Trust, as
You had one, CBT in Waterbury.
CBT. Yes, exactly. So I became what was called a junior accountant there for a semester, and 3 weeks in, I was so miserable. I went to my boss. I said, "Listen, I got to quit. I can't do this anymore." He goes, "Why don't you?"
Too much pressure?
No, it just it wasn't the most exciting area, and there was a lot of reasons. It was, but what he did tell me was, "Hey, I think you're pretty good at this. So why don't you stick with it for another couple of weeks, and then you tell me." And the way it ended up, I stayed there for the rest of the summer. And at the end of the summer, I applied for and got a job as they call it permanent part-time. I was working 20 hours a week at CBT while still maintaining a full course load at UConn. So
Was it a CBT up near stores or?
Hartford. It was actually East Hartford. So, I was pretty busy for my first semester of senior year, and I had some disposable income, which was also very nice as a college senior.
Did you stay as an accountant or were you on the teller line?
No. It was we were in the stock transfer unit, so it was balancing the tapes for different stock transfers and bond transfers. And by the end of my first semester of senior year, I had decided that I wanted to go back up to UConn and have some fun. Fraternity guy last semester. And CBT was kind enough to set me up with an interview in the municipal bond unit, which would have been very nice. They offered me a job, but I was able to parlay my internship at CBT into a job with a bank that was called City Trust Bank.
Oh, yeah.
Based out of Bridgeport, Connecticut. And City Trust hired me for their commercial lending training program. So it was a program that was purely dedicated on commercial lending. So you spent 12 months in credit, and then you went out to the field, and then you did loan review. You kind of did everything that was associated with the credit and lending function at the bank.
So more exciting than doing the bonds and the tapes and the trading.
Marginally, yes.
Well, you're still in commercial lending, so it must have been a pretty good training. And to start that early, I think, is really helpful.
Yeah, and when I went through that process at the time, it was the late 80s, early 90s. So that whole credit crisis was occurring. I don't know if you remember. 1992, when every other house in Bridgeport was for sale and banks were folding. So for somebody that was a trainee, I got tremendous experience handling a bunch of different things that I really had no right, handling at the time based on my experience. And it really was helpful. I went through my first, liquidation of a company. I went through workout. I went through, just all sorts of different scenarios.
And never boring.
No.
But can be heartbreaking. Thank goodness I had my CCIM designation through these recessions. I think I'd gone through 5 or 6 problem things in the 40 years I've been in. And when CARC and Recovery and JLL and or JAMB, I think all these different companies were taking over the bad loans from the banks and those sorts of things, if I recall.
That's exactly correct. I think Recall was.
Yep. CARC. Yep.
So City Trust.
J.E. Roberts, that's what it was.
J.E. Roberts was the real estate management company. And if we have time later, I'll tell you a story about them. But as the kind of the world was ending, I had a opportunity to either go back to Bridgeport and work for the bad bank.
Yeah, to get people worked out of their problems.
Exactly.
That's workout.
or stay. Not like the gym.
Is it a way?
It could be.
I want you to pay me back, or I'm going to kick your tail
Yeah.
or take your house.
At that point, City Trust had a loan production office in New York City, and so I had moved not physically, but my work. I was out of the New York City office,
And that was meaning you'd loan in New York with that loan production office, correct?
right, with no deposits taking. It was just purely a transactional lending relationship, and as you might imagine, little Connecticut City Trust Bank lending in big New York City. We weren't getting the A and the B borrowers. We were getting the C and the D. So it was a lot of work.
More analysis.
Yeah, working out of those situations. So I was able to parlay that into a job with a New York bank, a small, community bank in Manhattan, something that you wouldn't see
Right.
today. It was a
Right.
$400 million bank, and I ended up moving to that bank and staying there for the next 8 years. So it was kind of an interesting because, like, as I mentioned, it was a $400 million bank in the middle of Manhattan, but it was kind of old school industries. We had a branch that was in the Furrier district. We had a branch that was in the jewelry district. We had a branch that was in the rug district. We had a branch that was in what they call the jobbers, the dress trade and stuff like that.
And
So
back there, a $400 million bank today would be 800 or a billion. I mean,
I don't know.
But
I don't know if it would
value of
even
money.
be even that big. But
interesting clientele you're mentioning.
But it
too.
was just kind of the old school New York clientele, and it was a great learning experience for a young kid from Southington, Connecticut. So it was a great time. I spent, like I said, 7 years doing that, and they sponsored me to go to the Stonier Graduate School of Banking, which is kind of the American Bank Association school for
ABA, as people in the audience might know.
So that was great, and I ended up leaving there to work for Marine Midland Bank, which is HSBC, as a business development officer, which is great because I got to work with much larger, like MetLife when it went public and stuff like that. We had different, very different client base for that. But by the end of that time, my wife was going to have our son, and I decided it was time to stop fooling around and get back to Connecticut, and where we lived and we continue to live.
Well, welcome back.